what every home seller and home buyer wants to know. Will home prices decline in 2022? Hello, this is Rima Rafe with the Rafe Group with the XP Realty. When mortgage forbearance plans were first announced and the pandemic surged through the country in early 2020, many homeowners were allowed to pause their mortgage payments. Some analysts were concerned that once the forbearance program ended, the housing market would experience a wave of foreclosure like what happened after the housing bubble 15 years ago. Here's a look why this isn't the case. Number one, there are few homeowners in trouble this time around. After the last housing crash, over 9 million households lost their homes to foreclosure, short sale, or because they gave it back to the bank. Many believed millions of homeowners would face the same fate again this time. However, today's data shows that most homeowners exited their forbearance plan either fully caught up on payments or with a plan from the bank that restructured their loan in a way that allowed them to start making payments again. The latest data from the Mortgage Bankers Association studies how people exited the forbearance program from June 2020 to November 2021. And I want to share with you the findings and the percentage with all these programs. And 38.6% left the program paid in full. 19.9% made their monthly payment during the forbearance period. Almost less than 12% made up all past due payments, and less than 7% paid the loan in full, and 44% negotiated a workout repayment plans. Little over 29% received a loan deferral, 14.1% received a loan modification, 0.8% arranged a different repayment plan, and 0.6% sold a short sale or did a deed in lieu. The 16.8% that's left of the program still in trouble and without a loan mitigation plan in place. Number two, those left in the program can still negotiate a repayment plan. As of Friday, the total number of mortgages still in forbearance stood at 890,000. Those who remains in forbearance still have the chance to work out a suitable plan with their servicing company that represents their lender. And the servicing company are under pressure to do just that by federal and state agencies. The Consumer Financial Protection Bureau and State Attorney General looks like they're adopting a zero forbearance approach to mortgage servicing enforcement, likely that this will limit foreclosures activity for a good part of 2022, while servicers explore all possible loss mitigation options. Number three, most of homeowners have more than enough equity to sell their homes. For those who cannot negotiate a solution, and the 16.8% who left to the forbearance program without a workout, many will have enough equity to sell their homes and leave the closing with cash instead of facing foreclosures. Due to a rapidly rising home prices over the last 2 years, the average homeowner has gained a record amount of equity in their home. Not only that they have equity gained help the homeowners more seamlessly to transition out of forbearance and avoid distressed sale, but they're also enabled many to continue building their wealth. And number four, there have been far fewer foreclosures over the last 2 years. One of the seldom reported benefits of the forbearance program was that it allowed households experiencing financial difficulties prior to the pandemic to enter the program. It gave those homeowners an extra 2 years to get their finances in order and work out a plan with their lender. That prevented over 400,000 foreclosures that normally would have come to the market had the new forbearance program not been available. Otherwise, the real estate market would have had to absorb those foreclosures. Number five, The current market can easily absorb over 1 million new listings nationwide. When foreclosures hit the market in 2008, they added the oversupply of houses that were already for sale. That resulted in over a 9-month supply of listings. And anything over 6 months supply can cause prices to depreciate. It's exactly the opposite today. The latest existing home sales report from the National Association of Realtors reveal total housing inventory at the end of November amounted to 1.11 million units, down 9.8% from October and down 13.3% from 1 year ago. 1.28 million unsold inventory sits at 2.1 month supply at the current sales pace. It declined from both the prior month and from a year ago. A balanced market would approximately sit on a 6-month supply of inventory. At 2.1 months, this market is severely understocked. Even if 1 million homes enter the market nationwide, there still won't be enough inventory to meet the current demand. If you'd like to know more or explore your options of buying or selling in 2022, let's talk. 661-236-8899, or you can find me on my website, rimarafe.com.